Good morning, everyone, and welcome to our virtual roundtable in partnership with specialist lender West One. My name is Caron Schreuder. I'm the Managing Director of Medianett, and we publish Bridging and Commercial and Development Finance today. Thank you very much to Michael and Matthew from West One for joining me and supporting this webinar series. We will be hosting these every week throughout 2021 with new live sessions, new panels and new topics. And we welcome you to join us every week for those. Our topic for this morning, which is especially relevant off the back of the events of 2020, is lender reliability. I do have a feeling that some of our attendees might have some strong feelings about this subject, and I would definitely encourage you to put your questions to our panel throughout the session. We'll try and answer as many as we possibly can. So why have we decided to tackle this somewhat thorny topic? Well, the pressure in our sector continues to mount, and it's really important that brokers and lenders can trust one another to get the job done for the borrower and get it done right. The experiences of the last 11 months have placed these relationships between stakeholders under immense scrutiny, with reports of lender service and deliverability levels dipping in and out of what is deemed acceptable. It is, however, worth noting that as an industry on the whole, we have pulled together in an amazing way and managed to keep business moving during a time when huge swathes of providers in other parts of the wider market have retrenched completely, and this is something that we should be proud of. Nevertheless, we're here to hold ourselves accountable and to work out how brokers and lenders can make the right decisions when selecting who to work with. It's always good during an introduction to share some data or stats, but and perhaps this is why this is so important to talk about. Being able to rely on a counterparty is difficult to quantify, but brokers understand what it means to feel let down and the effect this can have on their individual businesses, as well as confidence in the sector at large. I'm excited to hear what our panel has to say, but broadly speaking, it's evident that all parties have to do more. Brokers need to go further in their due diligence, and lenders have to go further in conveying information in a transparent manner and then committing to those terms. I will now ask our panel to introduce themselves before we kick on with the discussion.
Okay, I'll go first. My name is Alex Kyriacou. I'm the Managing Director of Funding Advisory. We've been going since 2018. Prior to that, I worked for principal lender Lendinvest for 3 years, and before that, I managed a commercial finance brokerage for 6 years. So listen, really happy to be here. I think the discussion is very relevant, so looking forward to getting stuck in, and hopefully those listening will find it very informative. So yeah, look forward to it. I must throw a disclaimer though, I'm working from home like most of you. There are 3 kids in the house, so whilst I'm assured that they are contained downstairs and we've doubled up in the buildings, there's a possibility the door behind me might burst open any moment. So I'm going to throw that out there just to be on the safe side. But yeah, very much looking forward to it though. So hopefully that doesn't happen. Fingers crossed.
Thanks, Alex. I think we're pretty used to that by now.
Me next, I think it's Chris Borwick, Director at Capital B Property Finance. We're a boutique brokerage focusing on bridging and development finance primarily. Been going since 2018 as well. Prior to that, I was at SPF for quite some time, over a decade. I'm in the office today, so hopefully no interruptions. Left the kids at home, so should all be fine on that front.
Craig?
Morning, Craig. Craig speaking. I'm an associate at Sirius Property Finance. We're a structured debt finance company dealing with our own client banks and introducers. Previous to being at Sirius, which I've been here now 7 months, I was a part owner of another company in the same industry. Previous to that, my history goes all the way back 30 years, unfortunately. So I've been around a fair bit of time working for lenders. I've been part of a lending operation before, and now back to broking. So that's my history. I am in the office like Chris today, so I'm hoping I don't get any interruptions.
Laura?
Hi guys, my name's Laura Toke. I work for SPF Private Clients. I'm one of the brokers. And for those of you who don't know who SPF are, we're a very well-established brokerage in the City of London. We've been doing secure property lending for over 2 decades, and I work within a specialist team that just does bridging and development finance. So we arrange hundreds of bridging loans a year. We've arranged thousands of bridging loans, and we tend to do a lot of business within the regulated space because of how we get our introductions and our ties with estate agencies, but we can do any aspects of bridging finance, whether that be auction finance, refurbishment finance, development finance, or bridging for sort of chain break scenarios, as well as commercial finance and bridging finance on land. So thank you so much for having me today, Caron. I think this is going to be a really useful discussion. I think like the last year has been a really challenging year for brokers and lenders, so it'd be really good to reflect on how the last year's been, and thank you as well for West One for sponsoring it.
Thanks, Laura.
I'm Matt Watson, one of the BDMs for West One Loans. So we are a specialist mortgage lender actually, with a loan book totaling about £1 billion now. I specifically cover short-term finance for West One, so bridging and development, all aspects of bridging and development, be it regulated or non-reg. I've been with West One for around 4 years now, and prior to that I worked for close to 4 years for one of the specialist packages, Enterprise Finance.
Good morning, everyone. Michael Grant, Head of Sales for Bridging and Development Sales at West One. Been here now a total of 6.5 years. Prior to that, I worked for a brokerage, the Loans Engine Central Trust, who they were known at previously. So I've been on both sides of the fence. So it's really good to be part of this discussion and really looking forward to it. So happy to get going.
Fantastic, thank you very much. So shall we kick off with a general overview from the brokers on the panel about, in general, how lender support has been over the past almost a year now? Chris, shall we start with you?
Yeah, sure. I think it's been generally pretty good over the last year. There's been different phases, of course, and we go back right to the beginning for the first lockdown. No one really knew how it's going to work out, and the reaction from some lenders was to sort of really withdraw from the market, whether it's just reducing criteria or stopping lending altogether. I think a lot of that, and I'm sure we'll touch on this later, came back to how they're funded. So there's possibly sort of a bit of panic from some institutional funders in the background, didn't really want to carry on or just wanted to pause their lending. So there were some issues. We were really focused on getting our pipeline through. And bar a couple of exceptions, we didn't have any issues with that. So lenders were honouring offers. We had a couple of deals that did fall through because ultimately the funding in the background was pulled. So it wasn't really the lender's fault. So we had a bit of sort of sympathy for them, although at the time it's obviously very annoying because you've got a client who's let down. But since then it's been pretty good. I mean, obviously we've had to adjust to a very different environment, different lending criteria. So it is tighter. There's no doubt about it. But I think lenders have fared pretty well, and they are trying to be as supportive as possible because they need to lend money. So yes, loan to values are lower, criteria is more difficult. You know, lenders are scrutinising everything more. But that's happened in the past at various times, and I think we just have to adjust to it and do the best we can. But on the whole, yeah, I think lenders have been pretty good. They're doing the best they can, like everyone.
Alex, would you agree?
Yeah, I would agree. I mean, I think at the start, right at the start, it was, of course, very uncertain. A lot of lenders either retracted because possibly, again, funding line driven, or some lenders stayed and some lenders maybe just reduced their criteria accordingly. So yes, we had some inquiries in the pipeline right at the start, and it was difficult to find alternative solutions where we need to. But I think as a whole, I think the market's been pretty supportive. After the first 2-3 months were out of the way, lenders were very clear with what they can and what they can't do. And we were in a new world, and we were able to navigate across that market accordingly. So as a whole, yes, very supportive. Again, at the start, I think is where it was just a little bit trickier as a whole.
Laura, what are your thoughts generally speaking?
I would say generally it was a bit of a mixed bag. Obviously, two of the big major players pulled their new applications completely, and there were lenders that also pulled their offers that they've made prior to the pandemic. So obviously that created a lot of difficulties for us. There were some lenders that met us in the middle with reduced loan to values, but then there were certain lenders which really did support us and continued to lend quite aggressively throughout the pandemic, really maybe altering their loan to value by 5-10% at the maximum. However, really just continuing to lend. And I think it really did show the lenders that had adequate risk policy in place, that weren't over lending in the good times. And I think, to be honest, West One were definitely one of those lenders. And we saw lenders that we maybe weren't using so much before. For example, one lender, we did 2 million with them, I think, in 2019. And then that jumped up to 15 million last year. So it was a real opportunity for lenders who were continuing to lend to take more of a market share. And obviously, you know, we're hugely appreciative of that. And I think that's going to continue. So I'd say it was a mixed bag.
Craig, from your perspective, how did you feel the support was coming from lenders in the last year?
I feel the support for I'd say a handful of lenders put their hat in the ring straight away and said, no, we're here for you. We're going to be lending. They made it very clear from day one on where they would be in the market, where they felt comfortable at that period of time, and they did support. There was other lenders which, through different reasons, some decided to stop lending, which obviously has its impacts on the broker, impacts on the client, impacts on lots of different things in the chain. There are some we can understand, you know, they're very, very big organisations. They were getting a run on their back book on payment holidays. You can understand why they were having to take those steps. But we were, to a degree, left a little bit high and dry and having to replace cases. But the lenders which were out there, which were saying, you know, we're here to help, West One included in that, really did help, and we're able to continue doing what we do best as brokers and looking after our clients.
Good to hear. So then over to Matt and Michael, from a lender point of view, how challenging / important was it for you to maintain momentum during 2020?
I think from our perspective is we kind of looked at the situation, we stepped back and it was an opportunity for us to enhance the relationships that we have with our key brokers and partners, and also create and develop new ones. And as the guys have said, we continue to lend throughout. Yes, obviously the risk appetite perhaps may have changed slightly, but we were there and we've come through that. And I think what has happened really well for us is that, like I said, we've managed to develop new relationships and obviously strengthen the existing relationships that we've got as well. So again, it's worked well for us as a group and an organisation, and we're growing from strength to strength. So I'm really happy with what has happened. It's a shame that obviously we've had to go through this pandemic, and the way in which we work has changed, obviously, but logistically we've managed to stay on point and continue on through. So glad to say that we've been here to help the guys and the wider market in terms of our clients, whether that be direct brokers, introducers. We're still here.
Oh, sorry, Matthew, anything to add to that?
Yeah, I think the only thing really to add from my side in terms of our approach as a lender is, I think the lenders that didn't have issues with funding or backing when the first lockdown came in, we were almost at the hands of third parties, so to speak, in terms of being able to still get business done. Because obviously we still needed valuations, we still needed lawyers to be able to do their work and witness documents. So a lot of the lenders that did continue to lend throughout 2020 made changes to policies, processes, to allow business to still be done. Accepting AVMs, allowing solicitors to witness document signing remotely are two of the examples that sort of we brought in, and a number of others brought in as well, to try and accommodate borrowers and ultimately support the brokers that introduce business to us.
So bringing us to now, I wanted to ask the panel what the situation is with lenders changing terms and criteria and moving goalposts in February 2021, what level of understanding do the brokers here have when it comes to lenders doing that? Should we still be exercising a level of empathy around the effects of the pandemic, or should we just be doing what we should be doing, which is lending responsibly and ethically? Laura, I'll come to you first.
Yeah, I think, of course, we have to appreciate that it's not just the lender. There's other elements at play. There's, who they're funded by. The lender might have the incentive to do the deal. They might want to do the deal, but they're just not able to. And I think we did have a lot of empathy, especially at the beginning of the pandemic, because no one knew what was going to happen. It was such an unknown quantity. And I think, yeah, we understood that loan to values needed to be reduced. We were doing before like 80% loan to value, and that generally dropped across the board to about 60, 65%. So obviously we understood that needed to be corrected, and there was quite a knee-jerk reaction from some lenders. But I'd say now, I would say that the lenders, we kind of expect that they'd be up to speed now, having 12 months down the line with the pandemic and how we need to approach deals. And if they're agreeing them up front but pulling them at the 11th hour now, I don't really think that's acceptable, because we've seen how the pandemic's panned out. But of course we appreciate why lenders had to take the measures that they did, especially in the early stages of the pandemic, because complete national lockdown, we couldn't even do valuations in some situations, and the property market essentially closed. So yeah, of course we have empathy for what the lenders were dealing with, but I think now, hopefully now we're moving into a better market with vaccinations being more widely rolled out. So we expect lenders to kind of be up to speed now at this point, I think.
What do you think, Chris?
Yeah, I agree with Laura. I think, yeah, it's very different, say, a year ago when we were going into the first lockdown to now. There should have been this adjustment, sort of getting used to the situation. And, if lenders are withdrawing offers, moving the goalposts at the 11th hour, then I don't really think that's acceptable. If you've got a well-presented case, all of the facts are there, so the broker's doing their job. There shouldn't really be any need to change things. Obviously, you might have a down valuation, you might have something that comes out during the process, but if the deal is effectively agreed and then unagreed for whatever reason, I don't think that's acceptable. And to be fair, I'm not really seeing that. If we've got a case that's agreed at credit with all of the lenders we're using, it goes through. It's more difficult, there's more scrutiny, we have to provide more information, but they are going through. So we haven't, in the last few months, had any experience really of lenders pulling at the last minute like we had, say, a year ago.
Alex?
Yeah, agree also. I think obviously lenders are obviously made up of individuals. These are individuals that you'll deal with on a daily basis. Most brokers will have their kind of top 5, top 10 they deal with. So of course you're going to have empathy when these individuals want to do the deal with you but can't. Possibly they're restricted by their funding lines or similar, or criteria has changed. But that was, I think, more of an issue at the start. As time has gone on, people have been very clear of what their parameters are, and because of that, we all know what we're working with and what the landscape looks like. So so certainly at the start, I can understand why people may need to possibly restructure their deals or even retract the lending on occasions. But more so recently, for the last 9 months, I would say, I've seen very little transactions where a lender has pulled out at the 11th hour. It has to be something pretty, catastrophic for that to happen. Early days, yes, you get some empathy. These days, now we know what your criteria is. No empathy, unfortunately, for being honest.
That's fair enough. So the word funding has come up quite a few times already. And I must say it's quite heartening to hear it come up so often, because I think a few years ago, I don't know if it would have as much importance to brokers and lenders alike. Craig, what are your thoughts on the importance of understanding the way that a lender is funded in order to be making the right decision with who you place business with?
I think as brokers, which the guys are probably all agreeing, it's our job to understand when we're putting one of our clients or one of our introducers' clients into a lender or funder, is to understand obviously how that lender funder works. And at the end of the day, they are one of our partners, and to understand the mechanics of how they work, how they're funded, and also are you pushing the right deal to the right lender? Because how some lenders are funded, they have pools of different investors, which some like a certain period, for example, like purchase, some straight refinance, some are not so keen on refurbish, for example. So you've got to understand who you're dealing with, and generally, we understand that at a high level. If you have a complex case, you have to get high level buy-in from day one, get to that board level to understand that the lender is backing you, and they want to see this deal through to the end. So as well as it's a lender's job, I do believe it's our job as well to make sure we're placing our client with the right partner, and that goes for in relation to if a deal which can happen quite frequently goes over term, is that a lender will be able to work with to smooth the process through and get the client into another facility or get an extension to be able to make sure that sale goes through. So there's lots of mechanics behind it, and like I say, for want of repeating myself, we have to choose the right partner from day one.
Michael, how have you seen an increase in introducers and brokers being more interested in the funding behind you as a lender, and how important do you think that is in the market now for greater transparency around that?
From our point of view, I mean, our reputation is second to none in terms of the group as a whole. So not so much as maybe in the early days, because we're well renowned, we're well established, we've built strong relationships. So it's not something that really comes up for me as much now. And ultimately, look, we like to stand behind what we say we're going to do. Transparency, as Craig has said, is key in terms of anything that you're going to do, and you want to make sure that if you say you're going to do something at the start, that's predominantly what you're going to do. And for me, it's about communication throughout the process, and therefore we shouldn't have any issues about funding. There's never been any issues for us from a funding perspective. So, we're fine on that level. I don't see that really being an issue for us.
Is there maybe a thought that it could be an issue more widely in the market, that there is a yeah
for sure. Look, and I guess going down to when the pandemic started, like Laura had alluded to before, lenders decided to pull from the market. I mean, there was a few large lenders who were well renowned within the space who pulled their funding, and therefore that possibly had a knee-jerk reaction within the market and had a ripple effect. And it's kind of like, well, if this lender's pulling, what then is going to happen to the industry as a whole? And who then can we turn to? Who can we rely on? And it goes back to, from our point of view, as I said, we kept on lending. We managed to build new relationships off the back of perhaps relationships that you guys had with other lenders that where you send your cases through, and we managed to obviously pick up where others couldn't. So that in itself is detriment to us in terms of, from a funding perspective, that we were able to obviously continue on through the pandemic, and as we are now, and we seem to be moving from strength to strength in that respect.
Matthew, from your point of view, what are you looking for from brokers to enable you to commit to the terms that you're submitting? Because a lot of it comes from the lender side, but you've also got expectations for how you want a deal, as Chris mentioned, to be packaged or put to you.
Yeah, sure. I think from brokers, it's really just about transparency from day one, and part of that comes down to the borrower as well. In if there's any quirks with the security, any complexities with the title, any credit issues in the background, for example, they're things that the borrower may, or less commercial borrowers, I guess, may try and hide and not appreciate that ultimately it will get found out anyway. But I think transparency is key, because, as Mike alluded to, where we've got multiple funding lines to support us, those things are not necessarily going to create us a problem. It may just change how we need to fund a particular deal. And if we are made aware of those from the outset, we can price the deal and offer terms accordingly, so that, providing obviously your generic valuation and legal inquiries go through as expected, you don't get any nasty surprises further down the line. And it should give us more ability, I guess, to deliver on what we're offering terms out at the outset. And then we can manage the broker's expectations, the broker can manage the client's expectations, and it should result in a much smoother application process and quicker application process for everyone. So more so, it's just full disclosure on as much as you possibly can. And I think brokers as well, over time, I mean, everyone in the room here is highly experienced, so you'll know which deals are best suited to which lenders. And there'll be certain deals that you know not to take to certain lenders because they'll heavily scrutinise it, or they don't like that particular asset class. But I think that's part of the broker's role, really, as Craig mentioned, is matching the right lender to the right client or right deal, so to speak.
Thank you. Alex, besides the importance of ascertaining the funding and the model thereof, what other hallmarks would you look for to ensure reliability from a lender?
For me personally, I look for somebody that's established with a proven track record. You know, given that I've been in the lending space previously, I'm still friends with a lot of brokers, and you get a lot of feedback. There might be a new lender that you haven't worked with before that you can kind of have some chats and get a feel for. Are they delivering? What was the process like, etc. But generally speaking, for someone that's established, well capitalized, I'm yet to see a deal where, you know, partway through the transaction something doesn't pop up and you need the lender to be able to adapt and still facilitate that transaction. So a well-capitalized funder with multiple funding lines allows you to do that. Also, I think it's important to have access to, not necessarily directly, but at some stage access to a decision maker within the firm, because you know that if it does happen, you've got somebody that you can have a chat with to get things sorted. And yeah, I think that's probably the key three things for me as far as you know, what I'm looking for in a funder.
What does your checklist look like, Laura?
I would say I'm going to, agree with what Alex said. A lender that is well funded. Traditionally, lenders that are funded by kind of, bank funding lines, or they collect deposits. We tend to have a greater deal of assurance that they have access to the capital. So that's a key thing. I'd say another thing is, as Alex said, again, speaking with the decision makers, we can speak to people. If it's a deal that's a larger transaction or a slightly quirky deal, we can speak to people at the top to make sure that it is a deal that they have appetite to do. And I think as well, covering off everything at the beginning before they even issue terms is really helpful, because ultimately the client just wants to know, is the lender going to do the deal? And if we're being asked for, additional proof of exit just before completion, it doesn't help anyone. And we're also looking a lot at how lenders have behaved throughout the pandemic. We had a lender tell us recently on a large transaction, I think it was over 4 million, that if the deal was over 2 million, that we should be thinking of a contingency lender for that deal. And unfortunately, no, it doesn't work like that. In that case, then that lender then becomes our contingency. So I think that's how we're establishing how reliable that lender is and choosing who we're now using going forwards. Even though now they might have opened their doors much more for lending, we're not going to open the floodgates to them, because the most important thing in bridging is reliability. Yes, the rate is important, but if the lender can't deliver, then it doesn't really matter. So those are the things that I'd say that we're looking at.
Craig, how do you tell if you're going to be, I mean, obviously you've all got established relationships with the primary lenders in the market, but again, have the things that you look for maybe changed or been more fine-tuned over the last year?
I would say that every lender's are continually trying to fine-tune their process, and they're all trying to look at fast-track scenarios. A lot of them are now calling it, and trying to look at areas where, if you do get such a thing as a standard bridging case, is there a limited amount of information that's going to tick the boxes for the lender and push it through quicker? I think most of us on here would probably say that no one deal is the same. They're all very much different. But working with a lender, going back to what the guys were just answering the previous question, that's got reliability. They do stick to their service level agreements with us. If they don't, it's generally because something's happened on that deal that's taken it outside of that. You have got access, as Alex was saying, to decision makers, and most importantly as well, actually working with the actual lender's firm of lawyers that they instruct as well, having constant dialogue with them, making sure we're copied in. And we can literally be that final piece of the jigsaw on the legal side to act between the lender their solicitors and the client solicitors as well, which can only but cement the deal even further and make it an easier transaction, or as much as it can be.
Thanks, Craig. Chris, what about red flags, for want of a better phrase? What would crop up that would make you avoid working with a certain lender?
I think the key thing is, if you have an experience with them where they let you down, obviously you're very sort of reluctant to go back to them. If they're very quick to get terms out, or maybe they're a new lender to you, they issue terms extremely quickly, you've got to really scrutinize whether have they actually credit approved them, what sort of level of approval there is, what sort of processes are behind it to actually get the deal approved. If you're working with a known lender, as Laura said, a deposit taking lender, you're speaking to someone who has the authority to sign a deal off, and they say, yes, we can do it. You've got that confidence there. If it's somewhere the funding is different and the process is a little bit different, perhaps they've got to go to an outside party to get it signed off. It's not that you shouldn't do a deal with them, it's just tread more carefully and manage your clients appropriately, because you can't say, oh, here are some terms that are from lender whoever it is, and they're agreed, when perhaps they've got to go through a whole lengthy process to actually be signed off, aside from the usual valuation legal due diligence. So I think that's the key thing, understanding that process that they go through to sign it off, but not completely avoiding lenders that are new to you perhaps, or lenders that you haven't used before, just because you don't know them. You just need to tread carefully.
Chris, you've just mentioned about a certain aspect of reliability coming with deposit funded lenders, and Laura, you've mentioned it as well. Alex or Craig, would you like to add to that, whether you have this association with reliability with bank or deposit funded lenders as well?
Who's going first? Craig, you want to go first?
Yeah. I mean, our process on that, I think, listen, like I think Alex alluded to earlier, everyone's got a panel of lenders which they'd have their favourites on, and generally that covers the whole market for them. In relation to bank deposit lenders, yes, they are. There is that level of trust there, but mostly as well. And that might give the client, that they're dealing with a bank as such. But there's a lot of other lenders out there that are well established, and they've got fantastic funding lines sitting behind them, even with some private individuals, which are just robust. So I think it really goes back to the point of understanding your lender, understanding your client's needs, and making sure that it's the right fit. Is certainly what we would do here at Sirius. We'd always look for, making sure we're putting the client in with the right, whether it be bank or whether it be lender as such.
I mean, yeah, from my perspective, the deposits is obviously a big plus. But just for me personally, the nature of the transactions I tend to deal with, which is, more on the development finance side of things, it could be clients acquiring land or similar. I tend to favour just the nature of the transaction, funders that have got 3-4 different funding lines, and even on residential purchases, like I mentioned earlier, I'm yet to see a transaction where part way through, when it gets to legals or valuations, something crops up, and yes, you've got originally access to cheap funding, but that funding line is no longer going to deliver. So you need to have a funder that accesses alternative funding to still make sure the deal completes. So for me personally, I like to see, in an ideal world, 3-4 funding lines to ensure that I'm covered in those events.
Interesting. Michael, there are things happening in the wider economic environment that have impacted our specific sector in bridging, and one of those things is the stamp duty holiday that is currently in place. How do you think that since July, when that was implemented, how do you think that has affected lenders' decision making, transaction levels, behavior, if you like?
For us, our behavior in terms of how we look at a case or deal with a broker hasn't really changed. I've not really kind of had a flurry of new business because stamp duty is coming toward the relief is coming towards the end of March, and saying, right, we need to get this done before such and such date. Bridging as we know it is predominantly meant to be quick, but obviously there are hurdles that need to be overcome in order to complete a deal. And like we said, we talk about having all the information from the start, managing expectations and getting the deal from application through to completion. But from a stamp duty perspective, at the moment for us, you know, we're quite busy in terms of purchases, refinancing, restructuring of deals, whether it be straightforward bridging deals or refurb, light refurb, heavy refurb. So it's not really something that I kind of see a lot of at the moment and saying, right, we need to get this done because of the stamp duty relief coming towards an end at the moment. So for me, it's not really impacted me in the way that I thought maybe it would have done, which is maybe a bit of a surprise to others. I don't know how the brokers feel about that in terms of the type of nature inquiries that they're getting in, and lenders obviously saying, look, we need to get this done. For me, what I would say is ultimately, I've noticed that valuers are getting really busy now. So with new business, we urge obviously deals to come in as quickly as possible so we can get valuations booked, get the legals instructed, because of the time frame if the stamp duty situation is going to become something that's going to be highlighted even more. So we're very much on the front foot when it comes to new business and ultimately looking at making sure that we're getting deals completed.
Laura, have you noticed any impact of aspects like the stamp duty holiday on our more specialist market?
Yeah, I mean, I would say where we're primarily a mortgage brokerage, obviously that feeds a lot into how we get our business. And I think mainstream mortgage lenders have been saying for a while now that it's just not going to be possible for them to deal with anyone trying to meet the stamp duty deadline. And that's because of pent up demand and their process is slowing down. So we've definitely got quite a few transactions where clients need to meet the deadline. And I think it's a really great opportunity for bridging finance lenders and brokers, because in most scenarios, the saving on stamp duty will be better than the costs of the bridging loan. So yeah, we're seeing a lot of business in that area. And I think I read somewhere that there's about 100,000 more property transactions going through at the moment than there was this time last year. So you can just see that is, you know, maybe not right now, but in a couple of weeks, people might realise that they need to use bridging. And I think a couple of weeks ago, we've seen a couple of lenders, even bridging lenders, who said that they can't guarantee that they can meet the deadline. But I think for the majority of bridging lenders, we've got 6 weeks, so it definitely should be achievable. But yeah, I think there's a lot of opportunity there, and we're definitely seeing a lot of it.
Chris, do you see any evidence of increased transaction levels off the back of the relief impacting service and reliability?
Not really in the bridging market. I mean, I think as Laura was saying, actually in the mortgage market, it's had more of an impact. We've got several clients looking to complete before the end of the deadline, but on mortgages rather than on bridging. We may see that upticking. It might be that the mortgage lenders let someone down, and we see an increase in business in March to try and rush something through. But no, I haven't on the bridging side, haven't really seen any change of behaviour or sort of criteria or anything. I've seen a couple of lenders advertising, you know, that they can get a deal through before the end of the month, before the end of March rather. Perhaps that's just an opportunistic marketing thing, much like the C-bills thing. Some lenders have gone for that, some haven't, and have used it as a way to get money out the door. Yeah, it seems to have had less of an impact than I thought it would on the bridging market.
Craig, anything you'd like to add to this area?
Yeah, I mean, for my particular client bank is more development finance, commercial investment, and bridging. But obviously, Sirius as a whole, you know, the guys on the banks of desk which do the regulated and mainly investment, they are very busy at the moment in relation to that sector, and they are feeling the push for the stamp duty side. But me personally, it's not something which is really giving me any headaches, to be honest.
Good to hear. So just in terms of there's quite a few new introducers and brokers operating in the bridging market, perhaps as a result of the lines being slightly blurred between mainstream and specialist over the last year. How important is it that these brokers understand how to ascertain the reliability factor, who they should be working with and why, and what sort of impact can this have on the sector as a whole if we don't ensure that the right choices are being made? Matthew, I'll come to you first.
Yeah, I think it's really important that they do understand not just how a lender's funded, but lender appetite, what different lenders will and won't do, because I think what you'll end up seeing if they don't do that is they'll try and place a case with a lender that's not suitable for a particular deal. That lender will fail to deliver at some point during the transaction. It will upset the relationship with their client, but also it could end up meaning that either that client then goes to another broker and the broker loses their client entirely, or at the very least, the broker's got to reduplicate their work to go and place that case with another lender. There's a risk there that if it's the former of those two options, clients will start speaking to multiple brokers, shopping around, so to speak. And I think Mike and I certainly have spoken about this a number of times, where we've seen the same inquiry through 2, 3, potentially more even brokers, all within the space of a couple of days. And the mentality I think that sometimes leads to from a lender's perspective is we think, oh, well, if we're seeing this case a lot from multiple introducers, multiple brokers, inevitably there's something that we're not being told and there's something wrong with the deal, so to speak. So that could create an issue with it. Also on the flip side, if you're looking at the other of those two angles of, well, the broker ends up duplicating their effort, it could switch that broker off if they're less experienced with bridging, less experienced with commercial, and that's their first experience of trying to place a bridging loan, for example. They may think, actually, this is really difficult, it's hard work, and they may not consider it on future transactions or for future clients, when actually the bridge might be the best product for them. And then clients are then not getting the best advice.
Alex, do you sometimes struggle with the impact of a lender's behavior on what you're trying to do as a broker for borrowers? And do you sometimes see that lack of confidence from them when you maybe feel let down?
Yeah, on occasion. I mean, again, back to the kind of space that I personally operate in. I guess more on the development side of things. It's very different to that of bridging. I mean, I will get involved in the bridging side, maybe if I'm exiting a developer out of the facility to extend the sales period. But typically speaking, you know, from the lender's perspective, they've been pretty good so far. What I would say though is, you were discussing, I guess, new brokers coming to the market looking to on bridging development. And I remember this from the lending days. You know, a lender can receive an inquiry in one of two ways. You can have an inquiry come in where you've been fully furnished with the information and you can see day one exactly what's going on. And equally, you can get an inquiry where you get a couple of lines of information. You know, here's the address, price, and there's a few attachments thrown in which there's no relevance to this case at all. And the funny thing is, those inquiries convert at a much lower rate than the ones where there's been furnished with all the information. So what I would say, if you've got, I guess, new brokers or even existing brokers, from my perspective, it's a case of, you know, increasing the odds of conversion. And if you furnish a lender with as much information as possible, your odds go up massively in converting that deal. And that's the best advice I give to, I guess, new brokers looking in the sector.
Chris, anything you'd like to add to the importance of general education?
I think it's important. I don't know how many new brokers are coming into the market in terms of can they have a real impact on the market as a whole, but yeah, I mean, a lot of these things you learn through experience. You know, sometimes bitter experience where something goes wrong and you just learn to maybe present things better. So yeah, do those new brokers need to learn, you know, to get to know the processes and so on? Yeah, absolutely. And if there's a way to educate them quicker than otherwise, that would be great. Because you can spoil a deal if you've got several brokers looking at it, presenting it in different ways. Some present it badly, some present it well. It might just put a lender off and they might not want to do the deal at all, whereas actually had it just been presented once and well and thoroughly, maybe they would have done it. So it can have an impact, and yeah, brokers need to learn what they're doing and learn how to present a deal properly.
Alex, I've just had a question come through around the concept of multiple funding lines that you mentioned earlier. We've seen a number of institutional investors looking at the market of late, the likes of JP Morgan and such. Do you think that that's going to increase, and then that will also help to give you some more security when working with lenders if they are establishing multiple funding lines?
Yeah, I think it will increase. I mean, it feels like every lender I'm speaking to at the moment is looking for another funding source of some form, because it allows them to access cheaper levels of funding. So what that means is when it comes to these vanilla transactions, they can remain very, very competitive in the market and target what is viewed as the vanilla transactions, which everyone's hunting for. So that's what that funding line will allow them to do. On the flip side, they still want to be able to cater for maybe the deals that have got a few quirks in it, maybe the title is not as clean as it could be, maybe they're looking at commercial or land. That's usually not going to be institutional, it's usually going to be funds of some sort or high net worth individuals. So it feels to me that most lenders want to be able to attack all asset classes, and in order to do that and do it properly, you need to have multiple funding lines available. And if you want to start looking for the vanilla stuff as well, you need a lot of the time cheaper funding lines, and that's going to be the institutional that ticks that box for all these guys.
Thank you. Okay, so I'm just going to go to each member of the panel for any parting thoughts on this. Michael, and thank you as a lender for continuing to keep the appetite that you've had over the last 12 months. It wasn't a coincidence that we partnered on this topic with a lender who has managed to deliver. So thank you for that. And what would you like to leave the attendees with on this note?
Yeah, for me, very interesting discussion, and it's one of the forefront of what we do, and reliability is very key, especially in the bridging market, and having the confidence to work with West One and work with you guys is great. Continue what you're doing, and from our point of view, we'll continue supporting you in the wider market as well, in terms of brokers and partners and new partners who come on board. The thing that I would say is obviously just make sure that, like we said, transparency is very important about how we do things, knowing the case from start to finish, understanding what the deal is all about, what we're going to try and achieve. Remember, there's obviously many parties that make up a transaction, but the common denominator is the importance of getting the deal done for the client. Yeah, so we've got a broker, an introducer, we've got us as a lender, and then obviously we've got third-party involvement with the solicitors and lawyers, and we all need to be on the same page to make sure we're getting the deal done within ample time, and understand that we want to meet deadlines, not just for the client but for us, to make sure we can continue to lend in the same fashion that we have. So I'm really pleased the way things have been going for us as an organisation, and long may that continue.
Matthew, your final thoughts?
Yeah, I mean, I kind of echo Mike's sentiment really, and I think probably this week is the first week I've really started to see an increase in inquiry levels where the reason for the bridge is to beat the stamp duty deadline, and I think that will continue to increase as we get nearer. The comment Mike made around surveyors, and in particular at the moment, what brokers should be advising their clients really, I guess, is to get things moving as soon as possible. And even if it means getting to a point where your completion date is at the end of March, and that's your agreed date anyway for the chain, but you're ready to complete second week in March, that's an ideal situation, or a much better situation to be in than the client coming to you 2 weeks before completion, no valuation, no legals, trying to rush everything through before the deadline, because it doesn't really help anyone. I think the really important thing that clients need to be clear with is when they need the money by, because I think the concept and the expectation of bridging loans being quick, the response that I get a lot, and certainly I'm sure Mike and every other bridging business development manager in the industry gets, is, well, when does the client need to complete? As soon as possible. But it doesn't really give us any guidance to say, okay, well, as soon as possible, is 3 weeks going to be sufficient? Is 4 weeks going to be sufficient? Or do they need it next Friday? And at least that way, if we're really clear about what deadline needs to be met, we can ask the relevant questions around what work's been done already, or what needs to happen to get to that. Or simply, it might just be a case of saying, do you know what, we can't deliver within that particular time frame. you're better off looking at other options. And at least then no one gets let down, and ultimately the broker is able to place the client with the right lender in the first place.
Thank you for that call for clarity. We're hearing that quite a lot. To the broker panel, go to your final thoughts, but thank you for being very candid in your experiences today. It's not the easiest topic to talk about commercially, so I really appreciate your input. Craig, what final words would you like to share?
Obviously, thanks and yourself for today. Found it interesting. Thanks to all the lenders that really did put their head above the parapet and stuck with the broker community when things were very tough and we didn't know what direction we were going in for a while. Fortunately, we're all on the right path and we've all continued to do what we do best. Probably the leaving thought really is more around, like Alex, I do a lot of development finance, but it's working with lenders like West One, where you've got an acquisition piece with the bridging, you've got the development arm, you've also got investment. It's so important now because to look at what is going to be the end goal for the client, what they're looking for, and are you with that lender that could be work with the client all the way through. And I think we're seeing more and more of that with lenders looking to get into other areas. Ones that are doing it well. For our client journey, it can make matters quite seamless, and you're not going through a whole ravel of new legal inquiry, etc. Because the clients obviously had that done on phase one. So yeah, just more of the same from the right lenders. And thanks for your time. Appreciate it.
We will be tackling the concept of life cycle lending in another session soon. So I'm glad to hear that's of interest. Laura, your parting thoughts.
Yeah, no, I just want to say again, thank you so much, Caron and Medianett, for doing this discussion, because I think we're all going a bit mad at home, and it's really good to speak, with other brokers and lenders about how we've all found the past 12 months. Again, I just want to say thank you so much for the lenders that did support us when other lenders might have pulled their offers and funding, because without you, we can't do anything. And I think there's a lot of opportunity now for bridging. We've got auctions coming up. There's a lot of people talking about, there's a lot of investment opportunity in the market and prices potentially coming down. But I think ultimately, as everyone said, reliability is the most important thing in bridging, and speed. And a lot of lenders last year who might have been on our preferred panel, because that's how we work, and now on our panel B, just because of their sort of reaction to the pandemic and how they were with existing offers and clients. But the lenders, and West One is definitely one of these, that have continued to lend, we're going to be opening the floodgates to them and doing a lot more business with them this year. So I think that's really what I want to say. And thank you so much, Caron and West One, for hosting this.
Most welcome. Thanks for joining us. Chris.
Yeah, I just want to echo those thanks as well. So yeah, thanks to Caron and West One for arranging this, and I think it's been a really useful discussion. Thanks also to the lenders who have stuck by the broker market throughout the pandemic. There's been some really reliable ones, and others less so perhaps. I think the key thing for me is lender choice. I've sort of taken away from this discussion, how lenders are funded, understanding the processes behind it, and also just good communication with the broker to make sure deals go through. A good example is a deal we had recently complete with West One, actually, where we had some fairly robust conversations throughout the process, but we communicated well, and it got completed, and then the deal was done. So I think that the transparency, that communication is absolutely key in a successful relationship with the lenders out there.
Thanks, Chris. And Alex, last words from you.
Thank you. Really enjoyed it. Thanks, Mike. Thanks, Caron. Appreciate the opportunity. It's not been an easy year. Like I said, the first few months were the toughest. But if you look at where we are today to where we were at the start, you've got lenders, systems, tighter processes, tighter systems. You've got lenders that were only doing bridging, moving into development and refurb. You've got civils in the mix now. You've also got some lenders almost moving to mezzanine finance offerings as well. So the market's changed quite a bit, and I think for the better. We've got more options available. It's looking very, very competitive. So I think, future's looking quite bright at the moment. Touch wood. So let's see how everything goes. But yeah, appreciate the opportunity.
Fantastic. Thank you once again to everyone, especially to Matthew and Michael for supporting this. As mentioned, we will be talking about a whole raft of topics each week on the development side, on the bridging side, on the commercial side. So thank you to our attendees for joining us today and for engaging. And thanks again to the panel. Have a wonderful rest of your day, and we'll speak to you soon.
Thank you.
Thank you very much.
Bye. Thank you.
Thanks, mate.